Preparing for a payments operations interview? You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer, followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Walk me through the end-to-end lifecycle of a payment, from initiation to reconciliation. A payment lifecycle starts when the client or system initiates an instruction and ends when funds are settled and reconciled. In between, operations validates mandatory fields, checks balances, runs sanctions or fraud screening, routes the payment through the correct scheme, monitors acknowledgements, and resolves exceptions. I would always think in terms of initiation, validation, authorization, clearing, settlement, confirmation, and reconciliation, because breaks can occur at any point in that chain. While answering, focus on the full transaction journey, key operational control points, and how validation, clearing, settlement, confirmations, and reconciliations connect to reduce failed or misdirected payments. Question 2. What key details would you validate before releasing a payment? The first things I check are the basics: amount, currency, value date, beneficiary name, account or IBAN, bank identifier such as BIC, and payment purpose where required. Then I look for consistency between fields, like currency matching the payment rail and beneficiary details matching screening results. Small data issues can cause repair queues, rejection, or even a wrong payment, so clean static data is a major STP driver. Make sure to cover the core data fields, why accuracy matters, common validation failures, and how clean instructions improve straight-through processing while lowering repair costs and operational risk. Question 3. What is the difference between payment clearing and settlement? Clearing is the exchange and validation of payment instructions between banks or scheme participants. Settlement is the actual movement of funds that discharges the obligation. For example, a batch of ACH payments may clear first, with net settlement occurring later through a central bank or settlement account. The distinction matters because a payment can be accepted operationally, but not yet final from a cash and liquidity perspective. In your answer, talk about timing, legal finality, payment scheme roles, and why operations teams track both instruction status and actual cash movements separately in daily processing. Question 4. How would you investigate a failed, rejected, or returned payment? I start by identifying the current status: rejected, pending, returned, or settled with a break. Then I review system messages, validation errors, bank acknowledgements, cutoff times, sanction alerts, and account details. If client action is needed, I communicate clearly with the reason and required amendment. I also document the root cause, because recurring failures often point to static data issues, training gaps, or a scheme-specific formatting problem. Be sure to mention triage, status checks, message review, client communication, escalation, root cause documentation, and how you balance speed with control when repairing or resubmitting payments. Question 5. What does straight-through processing mean in payments, and how would you improve it? Straight-through processing means a payment moves from initiation to settlement without manual intervention. In operations, high STP usually means cleaner client instructions, better reference data, stronger validation rules, and fewer exceptions. I would improve it by analyzing repair codes, identifying top failure reasons, fixing templates or static data, and working with technology on controls. The benefit is not just efficiency, it reduces operational risk and improves client experience. While answering, define STP practically. Then explain the drivers of manual repairs, metrics used to monitor it, and process or data improvements that can raise the STP rate. Question 6. Why are payment cutoff times important in operations? Cutoff times determine whether a payment can be processed for a requested value date. If an instruction arrives late, operations may need to reject it, process it on a best efforts basis, or roll it to the next business day, depending on policy and scheme rules. Missing a cutoff can create client funding issues, overdrafts, or failed settlement, so I would communicate early and monitor queues before major currency and market deadlines. Make sure to cover value date impact, scheme and currency deadlines, client communication, escalation protocols, and operational consequences such as failed settlement, overdrafts, or same-day funding pressure. Question 7. How do reconciliations support payment operations control? Reconciliation is how operations proves that internal records match external cash, scheme, or correspondent bank records. I would compare expected payments, actual settlements, bank statements, suspense accounts, and ledger postings. Breaks should be aged, owned, investigated, and escalated based on materiality and risk. A good reconciliation process catches duplicate payments, missing credits, incorrect fees, and timing differences before they become client-impacting issues or regulatory concerns. In your answer, talk about matching internal and external records, identifying breaks, aging and escalation, suspense accounts, and why reconciliation is a key detective control. Question 8. What role do sanctions and AML screening play in payment processing? Payment screening protects the bank from processing prohibited or suspicious transactions. When an alert hits, operations should not simply release it. The team must follow policy, review matched names, jurisdictions, payment purpose, and supporting details, then escalate to compliance if needed. The challenge is balancing speed with regulatory control. I would avoid tipping off clients and make sure every decision is documented with a clear audit trail. Be sure to mention screening against sanctions lists, AML red flags, false positives, escalation to compliance, documentation, and the importance of not bypassing controls to meet processing deadlines. Question 9. How would you prevent or handle a duplicate payment? Duplicate risk is controlled through prevention and detection. Upfront, I would use unique transaction references, maker-checker approvals, system duplicate checks, and clear resubmission rules after failures. After processing, reconciliations and exception reports help detect duplicate debits or credits quickly. If a duplicate occurs, the priority is to stop it before settlement. If it has settled, we contact the counterparty bank, start recall procedures, and notify stakeholders. While answering, focus on preventive controls, system duplicate checks, maker-checker review, unique references, resubmission discipline, post-settlement detection, and recall or recovery steps when errors occur. Question 10. How would you compare SWIFT payments, ACH or SEPA transfers, and domestic wires from an operations perspective? I would separate the concept by rail. SWIFT is primarily a secure messaging network used by banks for international payment instructions, often involving correspondent banks. ACH and SEPA are clearing schemes with standardized rules, batch or near real-time processing, and defined settlement cycles. Domestic wires are usually faster and more final. The operational differences show up in required fields, cutoffs, fees, return rules, investigation timelines, and settlement risk. Make sure to compare payment rails by purpose, geography, speed, settlement model, message format, return rules, and the operational implications for processing and investigations teams. Question 11. If you had a large payment queue near cutoff, how would you prioritize your work? I would triage by risk and deadline, not just first in, first out. Same-day value payments near cutoff, high-value transactions, regulatory alerts, and client-impacting rejects come first. I would also monitor aged items so lower-value exceptions do not get forgotten. If volumes spike, I would escalate capacity early, communicate realistic timelines, and keep evidence of decisions. Good prioritization protects both client service and control standards during busy periods. In your answer, talk about risk-based prioritization, value date, payment amount, client impact, regulatory holds, aged items, escalation, and communication during high-volume processing days periods. Question 12. What is maker-checker control, and why is it important in payments? Maker-checker is a segregation of duties control. One person inputs or amends a payment, and another independently reviews and approves it before release. The checker should verify beneficiary details, amount, currency, value date, supporting documentation, and any policy exceptions. It reduces fraud, fat finger errors, and unauthorized payments. It is most effective when approval limits, audit trails, and system access rights are aligned with the risk of the transaction. Be sure to mention segregation of duties independent review, approval limits, audit trails, fraud prevention, and why maker-checker controls are especially important for high-value or amended payments. Question 13. How would you explain a chargeback and the operational steps involved? A chargeback is a card transaction reversal initiated through the card network when a cardholder disputes a transaction or a rule is breached. Operations must review the reason code, evidence, deadlines, and merchant response. Missing a deadline can mean automatic loss of funds. Strong handling requires accurate documentation, clear client communication, and understanding whether the issue is fraud, authorization, processing error, or a related service dispute. While answering, focus on card dispute lifecycle, reason codes, evidence collection, scheme deadlines, provisional credits where relevant, and how chargebacks create operational and financial risk. Question 14. Why is ISO 20022 relevant to payments operations? ISO 2022 matters because it creates richer, more structured payment data than many legacy formats. For operations, that can improve screening, reconciliation, investigations, and automation, but only if systems map data correctly. During migration, I would watch for truncation, field mapping errors, translation issues, and client readiness. Better remittance and party data should ultimately reduce ambiguity and increase straight-through processing across cross-border and domestic payments. Make sure to cover richer structured data, migration from legacy formats, field mapping, screening and reconciliation benefits, and operational risks such as data truncation or translation errors. Question 15. What KPIs would you track to manage a payments operations team effectively? The best metrics combine efficiency, risk, and client impact. I would track STP rate, repair volume, rejection rate, aged exceptions, reconciliation breaks, cutoff misses, investigation turnaround time, sanction alert aging, and error losses. Metrics should not just be reported, they should drive action. If one beneficiary field causes 30% of repairs, the team should fix templates, update static data, or improve front-end validation at source. In your answer, talk about operational KPIs, control indicators, trend analysis, root cause remediation, and how management uses payment metrics to improve service quality and reduce risk. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.